What's up, everyone, and welcome to another Bitcoin market update. In these videos, you'll learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. So, before we get into it, just a brief reminder that everything in this channel is for educational purposes only and is not intended as financial advice. All right, so let's dive into Bitcoin here in the monthly time frame. So, we had our monthly candle close yesterday, and this candle closed very bullish. With a short upper wick of profit taking, a nice sized body of the candle, and then increasing bull volume going into the candle close. So now we can see our clear trend here is a low, high, higher low. Now we're looking for a potential for a lower high again. So we're going to be seeing most likely what's considered to be an equilibrium pattern. So an equilibrium pattern is where the price starts to contract. So instead of making higher highs or lower lows and forming a bull or a bear trend, the price just kind of more or less does something like this, where it just kind of tightens up until eventually either it breaks out to the upside or it will break out to the downside. So typically these patterns, especially if they're on the monthly time frame, take a long time to play out. And not only do they take a long time to play out, but when they do play out and they break in one direction or the other, it leads to a significant either rise or fall in price for an extended period of time. Now, based on Bitcoin's fundamentals and the way that the market has been taking to Bitcoin in recent months, I would anticipate that this pattern will break bullish sometime, in 2022. So, because of that, what we're going to be looking for here is a potential lower high. And the reason is this drawdown was very significant. So for us to go up and make a higher high, we would need to go and rise about 127% on the first go, which is unlikely because we've, drawn down so much. So, it's possible. You can see it's possible, but it's unlikely still. So what we're likely to see is come up, form a lower high, do something like this. Come up, form a lower high, come down, form a higher low, and then it'll either be come up and form a higher high from there, or it'll be lower high, higher low, lower high, higher low, and then break out to the upside. So it could contract for quite some time. So that's something to keep in mind as we watch this. But the more bullish the market is, the shorter this equilibrium pattern will be. If we're extremely bullish, we're just going to streak right above this previous high over the next, going into the end of this year and make a higher high from there. If we're less bullish but still pretty bullish, we'll come up, lower high, higher low, and then higher high right thereafter. So we'll see how that plays out. If we look at the weekly time frame, we got close to breaking the previous week's low over the past few days, but we haven't actually broke that yet. So we got really close here, you can see, but now people have bought the dip pretty significantly here because of that monthly candle close. And now we're operating right near where the candle opened. So on the weekly time frame, we're also looking for a high to be set here. And the reason for that is because we've already risen, over 70% on the rise in price that we've seen since July 19th. And we're starting to lose some bullish momentum. And the way we know that is if we look at the volume, we can see volumes declining, and then we have this bearish candlestick here from last week with the actual candlestick itself looking bearish. So the combination of all of those factors leads me to believe that it's more than likely we're going to be setting our high either this week or next week. So I'm keeping an eye on that. Of course, it's always possible for us to just continue the trend upwards, but because of the factors that I just mentioned, I think it's more likely that we're going to be setting a high at some point, and we do need to set a high at some point. You don't just go straight up forever. Even when we were seeing this tremendous rise here, you can see we came down to form a higher low, we came down to form a higher low, and we continued the trend, higher low, until eventually we didn't make a higher low. So that's what I'm watching for on the weekly time frame. If we go down to the 3-day time frame, what we're looking at here is really two key levels, one resistance and one support. So if we look at the price action here, we can see we have our bull trend. Move this over slightly. if you see here, we have our bull trend, low, high, higher, low, higher, high. And so once we see that, we're going to grab our last down candle, which is a candle that closes with the close below the open, like this black one here. On my chart, they're black. On yours, it might be red. And then that candle, we can take a rectangle, draw it around that, and now we have a support level. So when we come back into the support level, we get a bounce, we get a second bounce, and then we go through this zone. So once we go through this zone and close 2 candlesticks below it, like we did right here on May 16th, then this level turns into resistance. And so you can see here, if we look, we have a rejection, and then another rejection. So we've rejected off of this gray resistance level 3 times now. But in the process of rising here, we also created a support level. And that's this blue zone right here, which I'm about to pull over. And this is from our bull trend here, from low, high, higher low, higher high, with 2 candle closes above the key 3-day high. So that we take our last down candle before that up move right here. That continued the trend, and that's our support level. So you can see we come down into it here, we bounce, we come down into it here again, and now we're bouncing a second time. So we could end up just seeing this level hold as support, and because this 3-day level has been tested one more time than this blue level, we could just see the price go up from here. So on the 3-day time frame, we're looking good. We're still in a bull trend. So at this point, the momentum is in the bull's favor to continue higher. It's up to the bears to change that trend. So let's look at what we have in terms of the 1-day resistance level here. So this is our resistance level back here from our bear trend, where we had a high, low, lower high, and then lower low pattern. So this last up candle, in comparison to on a bull trend where you're looking for the last down candle, this last up candle right here is going to be the area that we're looking for resistance. And you can see we've already held this as resistance multiple times now. So we've went into this once here, came down, twice, came down, 3 times, came down, 4 times, came down, and now we're coming into it the 5th time. So because we've already tested this level 4 times, we know that it's getting weaker with each test because there's less sellers every time that you go into a resistance level. So right now as we come into it, we need to keep that in mind, and if we see the price rise above this zone and close 2 candlesticks above it, when we return to it, that'll be an area to go long. Sorry, that looks like a child drew that. That'll be an area to go long right here, and then go for a higher high. So this is going to be an area that I'm going to be keeping an eye on in the coming days. Another area that I've been talking about that I'm continuing to keep an eye on is this level right here that we almost touched but didn't touch. Is these green SuperGuppy investor EMAs. So the SuperGuppy is an indicator where you basically have a collection of EMAs, and those are exponential moving averages. So they're just taking the price, the average of the prices for a certain period of time, and then plotting a line based on that. And so what you have is the shorter EMAs here, which are in light blue, which are essentially just faster EMAs. They move faster and they more quickly mirror the price and follow the price action, as you can see, because of the fact that they're taking a shorter time period. These ones take a longer time to move because they're taking a longer time period. So when these flip to be bullish, which is what they've done, now we're looking for these investor EMAs to expand, and that's what we're seeing here. They're separating from each other, and then these are going to provide support when we come back into them. So we got close to touching them right here. You can see the wick almost touched the top investor EMA, but didn't quite get there. So this is still where I'm looking to buy some more Bitcoin if we get a drawdown into that zone, because I'd like to participate in this uptrend more than I already am. So I would like to get an order into somewhere in this zone. And if we go into this zone this week, this will also set our weekly high. So then that'll be nice and healthy for us to continue the trend up in the coming weeks. So if we go down to the lower time frames, like the 6 hour, something I want to highlight here is this yellow resistance level that we're testing again. So we've tested this resistance level now once, twice, 3 times, 4 times, 5 times. This is the 6th time we're testing it. So every time like we said, this level is getting weaker because we've tested so many times. So if we go above this zone, very similar to the other resistance zone, and close 2 candlesticks above it, when we come back, what we can do is we can use our long position tool here on TradingView, and we can put that onto that level and pull our stop loss. You can either double click on it, and you can go right into the input section. You can put where you're going to go long on here in the entry price section. You can adjust your take profit level. So let's say we want to take it up to, let's say, 60,000 just for the fun of it, and then our stop loss being the low of that level, which is at 48.8. So we'll set that, we'll click enter, click OK, and then now we have our this is absurd. So clearly 60,000 is pretty high. So let's do something like 53,000. So if we go to 53,000, this would be a risk reward of 3.6. So that means that if the trade goes our way, we make 3.6 times the amount of money we make 3.6 times more money than we would lose if we drew down and got stopped out at $48,800. So that's one of the ways you can play this level. It's been tested multiple times, so once we go above it, a retest of that level would be a very simple, straightforward trade to potentially take. So that's what I'm currently watching for on Bitcoin. I'm still waiting for that weekly time frame drawdown, like I said, to go into those one-day investor EMAs on the SuperGuppy. So if you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course on Leutheria.com. This is where you can learn all of the fundamental elements of technical analysis so you can trade your favorite crypto assets with precision and accuracy. So check that out if you're just getting started trading these crypto assets. You can get 20% off using the link in the description below. And until next time, onward and upward.